Well, welcome back, ladies and gentlemen, to NSJ Gold Corp's channel. Joining us from the VP of Corporate Development, Rodney Stevens. Welcome back. Always a pleasure to have you, sir.
Hey, Kyle.
So we got lots that I want to kind of encapsulate in this video because I want to kind of dive into the economics of these metals that you're exploring for, whether we're talking gold or copper. But first and foremost, at the Golden Hills project, kind of your bread and butter project there, do you have any updates you can offer to investors? We haven't talked in a little while about it. What's going on there?
There's actually not much of an update, to be fair. We are going, it's a property that we're drilling. I know drilling, has been delayed, and then there's the assay lab delays and whatnot. So things typically take time longer than you might expect. I think that's kind of a chronic case. It's almost chronic with the COVID situation. Everything's with these bottlenecks. Everything's taking longer than you might expect. But the story is still, we'll be drilling it. We're drilling the near surface high grade gold veins at first, and then we're going to be positioning to target the copper gold porphyry, which we believe exists at depth. But before we can attack a concept drilling program on this massive potential copper porphyry at depth, we'll need to raise more money and put that drill program together. But right now we're confirming the historic high grade gold values and see what that gives us a better understanding of what that porphyry might be and where it's located and what it looks like.
Do you have a general timeline for that? Is this something that it'll be more expanding into in 2022? Because you said you're a little delayed, but can you kind of just put a hammer and nail to that slightly?
Well, the thing is, it's really just a matter of financing. I mean, we will probably be financing in the first quarter, but gold is rebounding and copper is rebounding, right? And we've kind of viewed as a gold play at this point. So we would like the share price to be a little bit higher, and we think that can happen in this rally for gold that's happening now. So watch for probably a financing in Q1 next year. And then from that financing, you could focus on the drilling program to do a concept program on that porphyry. And that's where the major upside in the story is going to be.
So on that note, let's talk into some of the economics here, because like you mentioned, gold's trading over $1,800 an ounce. It's continuing to push higher this week. Let's get into the economics here of that. What do you think about the pressures that are driving gold currently, and just your current thoughts on the precious metal market in this kind of hyperinflated world that we currently live in?
Yeah, it's really ironic because the big theme today is how inflation is taking off. And nobody believes the Fed when the Fed says it's transitory, it's going to come down. But if you look at Treasury bond prices, the Treasury bond market is actually confirming what the Fed is saying, because the market looks in future time. It looks at least about 1 year out. So as inflation, the CPI number has been increasing, Treasury bonds that have dipped are now actually creeping up as inflation is increasing as well. And what that means is that the market, despite rising inflation, is actually forecasting the inflation rate to drop. And then if you look at the long-term trend line for Treasury bond prices, it's been constantly going up. So unless that trend breaks the uptrend line, the assumption is that interest rates will continue to decline. And they have been declining since the 80s. And prior to COVID, we've been fighting a deflationary period. And there's no reason to think that after this wave of COVID subsides that we'll go back to fighting deflation as well. There's nothing to say that narrative has changed. So the market's actually agreeing with the Fed. So, but what does that mean for gold and copper? Well, for gold primarily, that means it's not actually bearish for gold. Gold doesn't track inflation in and of itself. It tracks the real rate of return on money. So as Treasury bonds continue to increase, even in the face of inflation, that means that the interest rate is declining. And if the interest rate is declining while inflation is elevated, then the real rate of return continues to drop. So when you have negative real rates of return, nobody wants money, they get into gold. So the situation for gold continues to be bullish, even if interest rates start to decline as they have been declining, because inflation is accelerating faster then rates are declining. So now, if that long-term trend line in treasury bond prices breaks, if the uptrend breaks down, then that's even more bullish for gold, because that means interest rates are going to be increasing. Well, it means inflation is going to be increasing. It also means interest rates are going to be increasing. But in other scenario, the inflation rate is going to outpace interest rates. So it's the outpacing of inflation over interest rates that is bullish for gold. So anyway is bullish for gold, but it'll be even more bullish if that long-term uptrend for treasury bond breaks and we're into a new rising interest rate environment. Rising interest rates, ironically, are even more bullish for gold because they don't rise as fast as the inflation rate.
Yeah.
So
Yeah,
we haven't reached that yet, but it's coming.
Yeah, for sure. We're definitely kind of in this really interesting renaissance for commodities and pivoting a little bit from gold because it's a little bit more of an easier, I think, commodity to understand for most people against something like copper, which you guys have also found with some of your programs. Do you want to touch a little bit on copper? Because I know it's a huge proponent for like the EV race that's going on, obviously the renewable sector. But from the economics and the macro here, considering I think gold's sitting at what, like over $4.30 a pound, which is like a 20-year high for this. It's just flying, right? But what's actually like, because you mentioned that there were supply bottlenecks with copper. It's a much different commodity. So what kind of insights can you offer us there?
Yeah, I mean, I actually think that gold is a harder commodity to understand for most people because what drives it is the real rate of return on investment. But
Yeah.
copper, and the thing is, there's a bunch of gold sitting in a vault and people are paid to guard it. And it's like, what's the point of that, right? It doesn't make any sense, but it's sitting there because it's a hedge for inflation. Of money. Well, the value of all the money in the world is $100 trillion, but the value of all the gold in the world is 10 trillion. So it represents 10% of all the money. And it's not that gold's the only inflation hedge. All hard assets are, even crypto is. But gold takes the crown as the best inflation hedge. But you need to understand that concept to see what drives gold. It's the real rate of return on money, because gold's really not used for anything. It's jewelry, but nothing substantial, nothing in comparison what's sitting in a vault that people are paying to guard. So the real rate of return drives gold, but with commodities like copper, they're actually primarily used for things, right? So copper, yes, copper, I like to say, is the most environmentally friendly metal in the world, because if you want to replace oil and gas as a means of transporting energy, then the only way to replace that is through copper. So if you want, it's the only other way to transport energy is through copper. So yes, there's electronic vehicle batteries and all the metals that are in EV batteries, but all the metals for electricity grids, copper is in all vehicles. Copper is I think it's the most environmentally friendly metal in the world. But what's driving copper? So copper has been, over the last few years, reaching an inflection point of a supply deficit. Like there's just not enough supply of copper to meet the demand for copper use. And a big component of that is this EV movement as well. So what COVID did is that it clogged up supply chains. So yes, now it accelerated that gap. Now there's no copper available, so copper is going through the roof at the same time when the governments of the world are also supporting their economy through investment programs. So you have no copper and big investment programs. Copper is going through the roof. Now, what happens when COVID impact is lessened and lessened, no longer, and inflation starts to subside as the market's saying? Well, yes, theoretically that could suppress copper prices, but the longer that it goes on, the more copper is entering into that forecasted supply deficit that already exists. So by the time we're out of COVID, that supply deficit is going to persist in copper. And with the movement of electronic vehicles and the demand to replace carbon fuels, as well as just a growing economy, copper should remain high even after COVID bottlenecks are resolved.
On that note, Rodney, I really appreciate these insights today.
My pleasure.
Yeah, this was I think this was pretty incredible actually, and I just implore anybody that they have any questions about this, because clearly in the macro there's lots to be bullish on these metals. So let us know what you think in that comment section below, and we can ask Rodney at a later date perhaps. But in light of this, folks, stay cool, stay awesome, and we look forward to catching you in the next one.